In a world teetering on the edge of political upheaval and economic uncertainty, markets continue to surge, seemingly impervious to the underlying risks. This paradoxical scenario, highlighted by European Central Bank Vice President Luis de Guindos, underscores a growing disconnection between financial markets and geopolitical realities. As wars rage in the Middle East and Ukraine, and half the globe braces for significant elections, stock markets in Europe and the U.S. reach unprecedented highs. De Guindos warns that this could be a perilous oversight. The ECB's latest financial stability report reveals that despite a positive macroeconomic outlook in Europe, geopolitical risks remain alarmingly high. The report cautions that the market's optimistic forecasts, fueled by anticipated interest rate cuts, might be overly simplistic, ignoring the complexity and volatility of global political landscapes. As nations increasingly adopt protectionist policies and economic fragmentation looms, one must ask, are we sleepwalking into the next financial crisis by underestimating these geopolitical threats? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So, before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world. And share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. Markets underestimate geopolitical risks amid global turmoil. Rising stock markets, Vs. Political instability. Despite a year marked by political instability and conflict, stock markets in Europe and the United States have soared to new heights. This seemingly paradoxical situation has been addressed by European Central Bank ECB Vice President Luis de Guindos, who expressed concerns about the market's apparent disregard for geopolitical risks. In an interview with CNBC, de Guindos emphasized that while markets are adept at assessing financial and economic risks, they often fall short in accounting for the complex and multifaceted nature of geopolitical threats. The ongoing global electoral cycle. De Guindos highlighted the significant electoral cycles underway, not only in the United States, but also across Europe. These elections have the potential to cause substantial shifts in political landscapes, further complicating the global economic outlook. The vice president stressed that markets might be underestimating the impact of these elections, which could lead to unexpected volatility and fragmentation in the global economy. Wars and geopolitical tensions. The backdrop to this financial buoyancy includes ongoing wars in the Middle East and Ukraine, regions whose stability is critical to global economic health. Despite these conflicts, markets have continued to thrive, suggesting a dangerous complacency. The ECB's financial stability report released on Thursday warned of considerable downside risks associated with rising geopolitical tensions, underscoring that historical data shows these risks remain high. Improved financial stability Vs. Hidden vulnerabilities. The ECB's report noted that financial stability in the euro area has improved due to a better economic outlook and falling inflation. However, this stability masks underlying vulnerabilities linked to geopolitical risks. Factors such as rising debt service costs, signs of banking profits peaking, and downturns in commercial real estate present significant threats. The report suggests that markets are overly optimistic, relying on expectations of interest rate cuts by major central banks to sustain growth. The risks of overoptimism. De Guindos pointed out that this pricing for perfection approach could lead to outsized market reactions if expectations are not met. This sentiment is echoed in the ECB's report, which warns that such optimism could result in severe market corrections. The vice president also noted the potential for increased fragmentation due to rising protectionist measures and tariffs, which could hinder global trade and growth. The threat of abrupt market correction. An abrupt market correction remains a significant vulnerability, according to de Guindos. He stressed the need for markets to consider the potential impact of geopolitical risks on various factors such as risk aversion, commodity prices, and overall global economic growth. Ignoring these risks could lead to sudden and severe disruptions, undermining the fragile stability currently observed in financial markets. Protectionism and economic fragmentation. The ECB vice president also highlighted the increasing trend of protectionism and its implications for global trade. The implementation of tariffs and protectionist measures by various countries could lead to economic fragmentation, reducing the potential for global economic growth. This comes in addition to the risks posed by ongoing conflicts in Ukraine and the Middle East, further complicating the global economic landscape. Conclusion: a call for awareness and preparedness. In conclusion, the warnings from the ECB and its vice president should serve as a wake-up call for markets and policymakers alike. The current optimism in financial markets may be overlooking critical geopolitical risks that could lead to severe disruptions. As the world navigates through a complex web of political, economic, and social challenges, it is imperative to remain vigilant and prepared for potential shocks. Are we ready to face the consequences of underestimating these geopolitical threats, or will we continue to turn a blind eye until it's too late? As we consider the potential for sudden market corrections and economic fragmentation, it is crucial to reflect on our preparedness. Are we adequately factoring in geopolitical risks in our financial and economic strategies? Share your thoughts on how we can better anticipate and mitigate these threats in an increasingly volatile world. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.